Ladies and gentlemen, welcome to another edition of In the Pit with your host, Lobo Tigre. Our victim of the day is Rudi Fronk. He's the chairman and CEO of Seabridge Gold, a company which probably needs no introduction, one of the biggest gold stories out there. But Rudi, why don't you go ahead and give us the 30,000-foot overview, and then I've got questions.
Okay, great. And appreciate the opportunity, Lobo, to be on this interview. Yeah, so Seabridge was a company that my colleagues and I formed in October of 1999. We're coming up on our 25th anniversary. And our stated objective at Seabridge was to try and build the industry's best leverage play to a rising gold price. Back then, gold was trading at about 260 an ounce. We foresaw higher gold prices going forward, which obviously we're now in. And our success over the years has been based on our ability to simply grow ounces in the ground faster than shares outstanding. The thought being that the more gold we can provide on a per share basis, the better our share price should do. And we've delivered on that concept.
Well, that was admirably pithy. And I noticed that at the very top of the presentation, 20-year track record, ounces in the ground faster than shareholder dilution. But that really sounds like the mission of a land bank play. And if that's what Seabridge is, okay, land banks can do well in a bull market, but you're also look like you're wanting to build a mine here. So clarify for me, are you a land bank? Are you going to be a miner? What is that objective still your objective now, or has it changed?
No, it hasn't changed. We continue to try and build on that. However, we also recognize that an ounce of gold in your pocket is worth more than an ounce of gold in the ground. So the next transition for the company, while we continue to explore some of our earlier stage exploration plays, is to take our major project, KSM, through a joint venture process with a major mining company and have them come in and build the mine for us. And then we will participate in gold flow from that project as the project starts producing.
Okay, we'll come back to that in a moment, but let me just go ahead and ask, who are you and why are you going to be able to make such a transition? Normally, that skill set changes from exploration to development and production. Are you the right guy for this job?
Absolutely not. Although I'm a mining engineer, I have no intentions of building mines ever in my career again. I tried that once in a prior life, and although we were successful in building the mines were eventually expropriated by third world governments, learning how real political risk is. So when you look at our asset base today, we're focused exclusively on Western Canada and in Nevada. Um, our goal is not to build the mine ourselves at KSM, it's to partner it up. This project is so large that, to be perfectly honest, there's maybe 7 companies in the world that have the technical, financial, and social wherewithal to build a mine like KSM. And our goal is to bring one of them in as a joint venture partner that will do the heavy lifting.
Well, you're front running my questions here, so good on you for thinking ahead like that. But that was really sort of the next question is, I mean, KSM was already there when I first started in this business about 20 years ago. And don't mean to be mean, but I remember it being held up as, there's an example of something that'll never be a mine. Too high up there, the grades, all that stuff. Flash forward to a different world and a different environment, and we're working towards maybe building the mine. But can you walk us through, if it was a land bank play and it's still sitting in the ground decades later, why now? Yes, the gold dollar exchange rate is up, but so are costs, gone through the roof in recent years. Well, why? Well, sort of if it's so big and so great, why isn't this a mine already? And then why should it become a mine now? If you can help me understand that.
Yeah, well, you're absolutely right. Back when we bought this project in the year 2000 from Placer Dome, it was a challenge project. Logistically, there was nothing available there in terms of roads, power, or ports. Back then, the copper price and the gold price was much lower than it is today. If you fast forward from the time we bought this project in the year 2000 to today, we've now spent $1 billion Canadian at KSM, advancing it not only through exploration and growing it. We now have 5 deposits there, which we own 100% of. When we bought this, there were 2 small deposits, so we found a lot of additional gold and copper. We've taken this project through engineering. We actually have a pre-feasibility study done on this project now, defining over 47 million ounces of proven and probable gold reserves and over 7 billion pounds of copper. We've taken this project successfully through the environmental assessment process. What differentiates KSM from other projects is we have our construction permits in hand, In fact, we've actually started early site construction at the project already over the past 2.5 years, spending about $450 million on construction at the project. So this project is now ready to go into a joint venture. The updated pre-fees we did in 2022 showed a more robust project than we ever did. Part of that was our ability to integrate the Snowfield deposit, which we now call East Mitchell, into the mine plan and redefining the project's economics through open pit only mining for the first 30 some odd years of production. And then last but not least, if you look at the infrastructure that's been built here since we bought it, we now have a major highway, Highway 37, just to the east of KSM. Along that highway, the government has extended the power grid, bringing cheap hydropower to the region. We've now contracted with the BC Hydro for 245 megawatts of power from that line that we'll be able to buy off the grid for about 5 or 6 cents per kilowatt hour. And in fact, they are now building our switching station so we can take power from the line into the project. And then last but not least, in the town of Stewart, there were no ports available back then. We now have 2 port facilities, one that's servicing the Red Chris mine and one that was recently constructed that's waiting for an anchor tenant. So yeah, back in 2000, this project was challenged logistically, economically, size-wise, but $1 billion goes a long way to improve a project.
Well, I have so many questions from what you said, but let's back up a minute. There's a PFS now, but wasn't there a full feasibility study done on a previous iteration of the project before? And does that not count because we didn't have Snowfield/East sulfurettes?
No, there was not a full feasibility study done. There were pre-feasibility studies as we advanced the project through exploration and continued year in and year out to add more metal. We continued to update that pre-feasibility study to incorporate the changes to the deposits.
All right, so I remember there was a time when there was a study done, and I thought it was jointly between you and Pretium about whether or not it would make sense to work together, and the conclusion was not. It was better for us. And I always wondered about that. And here, you end up acquiring Snowfield, and now it's part of the mine plan. So how did that happen? And I mean, it seems like there were synergies after all, but maybe management didn't want them to be, or what happened?
No, it was a time. So a little background history here. We actually tried to buy Brucejack and Snowfield from Silver Standard when they owned it. And our bid was turned down at the time. And then we continued to advance the project on our own. After Pretium was launched and they bought Brucejack and Snowfields from Silver Standard, I then sat down with Bob Quartermain. We looked at perhaps what could we do together. And it was very clear to us that Snowfield does not fit into Brucejack. That was his focus. But Snowfield did fit into KSM. So we tried to negotiate a purchase price along those lines. We actually did some joint studies together. But Bob and I could never agree on a price. He wanted more than I was willing to pay. And it wasn't until Pretium was actually a change of management there, and new management came in, and they decided to sell the company and wanted to pay down debt, that we were able to negotiate a deal that made sense to us and made sense to Pretium at the time. So we purchased Snowfield for $100 million US in cash, and then immediately integrated that deposit into our mine plan to show not only better economics, but it also helped us to change the mine plan, removing 2 of our 5 deposits that were previously modeled and included in the mine plan as block caves, took that out of the mine plan and went open pit only for the first 33 years of operation. So
just the first 33 years.
Just, yeah, and that only, the amazing thing is we have 12 billion tons of economic resources at KSM contained in our 5 deposits. We're permitted right now for 2.3 billion tons of tailings. So what we've been doing to be consistent over the years is to show what is the best mine plan we can deliver that captures the 2.3 billion tons we're permitted for. And the mine plan we did in 2022 showed a much better project than we previously had shown, but more importantly, a much simpler project, removing the block caves, changed the landscape with potential partners, but also open pit only for 30 years is much easier for big companies to move forward on.
Right. And also, not trying to be too easy on you here, but the addition of Snowfield would up the gold content of the mix, wouldn't it? I mean, one of the issues before was, I mean, as we're speaking, copper is hitting all-time highs. So, that wasn't an issue, but there were times when, there was more copper than gold there. And so a more gold-rich deposit would help with that perception at least?
Yeah, absolutely. So the pre-fees we have out there now with a 33-year mine plan, it's probably 75% gold, 25% copper in a revenue mix. Over the 33 years, the average annual production is 1 million ounces of gold and 178 million pounds of copper. That mine plan excludes Kerr and Ironcap, which are two higher grade copper deposits. So you're right. The change in the mine plan to open pit only changed it in terms of removing some of the copper from the mine plan, but making it a more robust project from an economic perspective. And understand you still have Ironcap and Kerr to go after at some point in time. The copper companies we're engaged with now are looking at, okay, how do I bring Kerr and Ironcap into the mine plan sooner than 33 years? Because that's going to change the landscape back to a copper project. As a mining engineer, and I've been in the business for over 40 years, I have never seen the flexibility and the optionality that exists at a project like KSM. If you want to go after gold, go after the three higher grade gold deposits that are open pittable. If you want to go after copper, you have Ironcap and Kerr you can go after, which by the way, you don't have to mine those as block caves. All five of our deposits crop out. We've run independent mine plans to show that we can get a 60 to 70-year mine life at a higher throughput that focuses more on copper.
But could that be, this is a side road, we don't want to go too far down, but I remember flying over it and thinking, wow, that's huge. And then also thinking, this isn't just going to be a mega pit somewhere in the mountains. Like this whole mountain range is going to disappear if they take all this. So could that be permitted?
It already is permitted.
The whole mountain can go away.
Well, all five deposits have permitted mine plans that you can move forward on.
Yeah, but some were underground when they were permitted, right?
Yeah, only one of the deposits was actually permitted as a block cave. Kerr was actually permitted as an open pit. But again, what's permitted today is what's in our pre-feasibility study. A company can come in and change mine plans as you go forward and change throughput. I mean, Pretium did that at Brucejack, increasing the throughput after they started operations by getting an amendment to their environmental assessment certificate and permits. Whoever builds KSM will likely do the same thing. You're looking at a project here that the initial 33 years captures only 20% of the known resources. One of the reasons why we have the support we do from the Indigenous people is they see a project here that's going to be multi-generational. We can actually show a mine plan that takes it out beyond 100 years. Not many projects that I'm aware of do that.
But no, I'll give you that one. I mean, the global resources is over 150 million ounces of gold, never mind the copper. So that's never been the question. It's big enough to run for, as you say, generations. But the question originally was, could that ever get permitted? Now that's been questioned. I mean, sorry, that question's been answered. And the question is, well, why hasn't it gone forward? So let's go there. I mean, you got your environmental permits 10 years ago about,
Right.
and okay, at the time, gold was sliding into a bear market. But if anything, that made you a more compelling, a cheaper takeover target. So, you had positive economics, or you had, some economics, you had the permits and stuff. Why does your company even still exist?
That is the $64,000 question. And
Yeah,
unfortunately,
well, you got to adjust for inflation. It's 64 million now.
fair enough. So when you look at over the past 10 plus years, you're absolutely right. I mean, a lot of things have happened to the project, but a lot of things have happened to the market as well. So there was a lot of skepticism by potential partners in the early days whether we actually can get this project permitted. So a lot of companies were sitting on the sideline waiting to see whether we would be successful in achieving our environmental assessment certificates, which we did in 2014.
By the
So
way, I was one of those skeptics. I was, I was surprised, like, wow, BC's better than I thought when you got that. But anyway, go ahead.
yeah, so we then went out, okay, let's start engaging with joint venture discussions on specific terms. We went out late 2014, early 2015, and Lobo, as you already mentioned, that year sucked. All the gold had
Technical
gone
description, yes.
yeah, gold had gone from 1900 down to 1050, and the major gold companies were not looking at new opportunities. They were focused on paying down debt, selling non-core assets, and trying to right the ship.
Okay, but what about big copper? You would have been on sale, and there was a lot of copper in the story at the time.
And not enough to attract a copper company at that point in time.
Hmm.
And also those mine plans, don't forget, involved block caves. Very few companies know how to block cave. Matter of fact, back then, the only companies that successfully block caved was Freeport and Newcrest.
Who bought your neighbors? So, I mean, it just like,
Well, they
what?
weren't. They
Where was
weren't.
Newcrest at the time? And why would
They
they buy Bruce Jack instead of KSM?
go ask the senior management that same question. They were focused on finding something already in production. KSM was not in production; had a ways to go yet. So 2015, we're marketing. The market is not ripe to get a deal done, so we kind of shut things down. We actually did an updated pre-fees after that to try and improve the project again to get better traction. We then go back out in 2017 with joint venture opportunities again. We actually get to a point that we have a deal fully baked and negotiated with a major copper company. And then as we're moving forward to complete the transaction, they came back and wanted to change some significant terms on the front end of the deal that we said no to, because at that point in time, the copper price had fallen out of bed because the Chinese trade wars. And they
Mm-hmm.
also had other issues in some of their other projects they needed to deal with. So that project, that discussion fell apart then, mostly because of the copper price than anything else. We then go back out and do an updated study again and move the project forward. We then have dialogue going on in a syndicate structure with a copper company and a gold company in late 2019, early 2020. We're supposed to be given a heads of agreement in March of 2020. Well, we know what happened in March of 2020. COVID hit. Canada shut itself down. Due diligence couldn't be done. And again, the big companies were more inward looking than outward looking. After that, then we then said, okay, how can we make this project even better? We were getting pushback from the big companies because of the block caving. And that's when we really went after East Snowfields, or now called East Mitchell, because by bringing East Mitchell in, Snowfields, we could actually change the mine plan, make it simpler, remove the block caves. And we are now back out with a formal joint venture process. About a year ago, we hired RBC Capital Markets to run a formal process. We had bodies already at the table. They brought another 5 companies into the fold that actually did their technical site visits, due diligence exercises in the fall. And now we're in dialogue with a number of those companies to get a deal done.
Okay, I know you can't tell me what's under your CAs and so on, but you're saying that there are several CAs, there are players at the table now.
Yes. And look, I mean, if, finally, I'd say the wind is at our back. We have a very robust project we can show to both gold companies and copper companies. We have metal prices at all-time highs. And we have the big companies now realizing, at least on the copper side, they need new copper projects. You listen to a lot of the big copper players, they're looking for new opportunities. The gold companies, quite honestly, are running out of reserves on a per share basis. They need new projects. And here we sit with 100% ownership of the largest gold and copper project in the world that's permitted, ready to go, and can show robust economics on. So I like our chances getting the deal done now. And more to the point, the proposed terms we're putting out there seem to be palatable to the companies we're speaking with as well.
All right, so that answers another question I was going to ask. The capex is 6.4 billion, and that's the new capex without the block cave, right?
Correct.
Right. So, I mean, if you didn't get an offer, I mean, it's hard to see a junior getting that kind of money anywhere.
Yeah.
So, so I'm glad, I'm glad to hear that you've got people in the room. And one more clarification on the status. So, I mean, you've got P&P reserves. Usually that comes with a full feasibility study, but from what you just said, you've never gone beyond PFS. So how are those classified P&P?
No, under 43101, you can classify reserves under a pre-feasibility study. The next step for the project is complete a bankable feasibility study. That's the first phase of our joint venture with a partner. So when we're out now discussing a joint venture, here's the structure we're focusing on. Phase 1, and look, we understand that nobody in the right mind is going to commit to a $6.4 billion project today without having a bankable feasibility study done. I mean, that's just reality. So what we're proposing in terms of structure is a 2-phased earn-in for a partner. We also know that we're going to have to give up more than 50% of this project to attract a partner willing to spend the dollars to move it forward. So phase 1 is come in, our partner sole fund, completion of a bankable feasibility study. within an agreed period of time that gets them in the door and earns them a 10% interest or so in the project by completing that study by a certain time. We then move into phase two. At bankable feasibility, there's another agreed period of time that our partner has the ability to make a construction decision, to go out and secure at least 50% of the project's funding through some sort of project facility. It could be a combination of offtake, stream, traditional project debt, or whatever, but going out and securing at least 50% of the project's capital and continuing to sole fund another agreed dollar amount that would take them from the minority position they earned during the bankable feasibility to a majority position moving through construction. Our goal is to simply hang on to a meaningful interest in the project, and I'll define that somewhere between 40 to 49%, while minimizing our capital contribution and having our capital come in towards the back end of construction. It'll be a very different environment for us to go out and raise whatever we still need to raise to satisfy our funding commitments when the project is 80% constructed or so.
Well, that makes sense, and it begins to tag into something else I was going to ask later, but let's start going there. So I get it. I understand the plan. Yeah, no questions on that. But another question I had is, okay, you've got this, never mind world class, but like literally biggest in the world project of its type. Why do we even bother with these other projects? And okay, if the idea is it's a land bank, and then okay, that makes sense to put some effort here. But if we're now moving towards a takeover or moving ahead with the project one way or the other, why have you not spun these out yet? If you get taken over, you're going to get bupkis for these other projects. As if I was your shareholder, I would want to get something for those other projects. And thinking about what you're just saying, if your capital commitments come towards the end of building KSM, well, by that time, maybe you've got Courageous Lake going, and that could make a huge difference to where you get that money from and what it costs you. So what's the plan on that? How do you protect shareholders from these assets getting, swept under the rug or bought without fair compensation?
Great question. First and foremost, we're not looking to be taken over here. I think comfortably tell
Like the
you that
initial earning, okay.
yeah, at today's share price plus a market premium, I'm pretty confident that people that have owned our shares for 25 years or so are not willing to sell at that price. But it's a great question. So what we've also been able to do over the years is take advantage of good markets and sell non-core assets as a way to fund projects like KSM without further equity dilution. Courageous Lake probably fits that bill. So we did an updated pre-fees on Courageous Lake earlier this year that showed a much better project than the predecessor pre-fees we did in 2012. We think that the market is now ripe to go out and get value for Courageous Lake through looking to sell the project, maybe joint venture it, but in a sales process, keeping a stream on the project to give us another kick at the can. And then we can take the proceeds from that sale of Courageous Lake and focus back on what we do best, which is exploration. We now have 3 exploration projects in the portfolio. You're right. Right now, we're not getting any value for that. But if we can take proceeds from the sale of Courageous Lake, reinvest that into the 3 smaller projects that we have at earlier stage, we think we can drive further value in the marketplace. Let's not forget that our exploration team has found more gold over the past 15 years than any company on the planet. Yeah, a lot of that came from KSM, but we also increased Courageous Lake ounces by almost 10 million ounces. So what we do best is explore, identify early stage opportunities, and then move forward on them and book ounces. And we will continue to do that, we believe, on the 3 non-core assets we have in the portfolio that right now, as you rightfully say, are getting zero value for our shareholders.
Okay, I understand what you're saying. But what if somebody does, go for broke here and makes a bid for the whole enchilada before you divest those? I mean, why not go ahead and create a spinco?
Look, I mean, anyone is entitled to show us a bid. When we sign NDAs, we don't ask for standstills. And then it'll be up to our shareholders to make that decision if they want to sell. And if we're not getting value in the sales transaction, we can then look to perhaps do a spinco at the time of a sale of a company. That's becoming more and more commonplace. If the acquirer is not willing to pay for the other assets in the portfolio, spin them back out to your shareholders at that point in time. Right now, spinning these assets out is probably too early, but at some point, you're absolutely right, that can be done.
All right. And just to dot the I's and cross the T's here, is there a poison pill provision?
No, no.
No feel for any need for that?
No, this company is 25% controlled by insiders. And then if you go to the next eight largest shareholders, it would take us up to almost 50%. You don't need a poison pill for that. Let the shareholders speak for themselves. If someone wants to make a bid that's acceptable to our big shareholders, we go along with it. I am a big shareholder as well, so I'm kind of in line with the other big shareholders we have in the company.
I was going to ask about skin in the game later, but since you bring that up, I noticed on the top holding slide, management isn't listed at all. How much skin in the game does management have?
Well, if you look at myself, other co-founders that may not be listed as management today, and you add in top of that Albert Friedberg, who's the biggest shareholder, has been a shareholder since 2001. Insiders own about 25% of the company. That includes myself, Jim Anthony, who's the co-founder, Albert Friedberg, and other founding directors of the company that may not be listed as a director today, but they are still meaningful shareholders.
Okay, well, since we're on the subject, may I ask how much of your own hard-earned money have you put in? No penny stocks that you got as options as a director
No, no, everything that I actually paid as high as $30 a share in the past to buy shares. So
in the
I
open market?
in the market, I have 95% of my family's net worth in Seabridge common shares. I think of the common shares I have, maybe only 25,000 was actually issued to me as RSUs, and I didn't sell the RSUs when I got them. So the shares that I own is real skin in the game. As my wife likes to say, "Hey, we're all in on this one, aren't we?" And we are. And that's just you should have skin in the game. One of the first things I look at when I'm looking at other companies to invest in, what is the real skin in the game that other companies or management may have? If there isn't real skin in the game, I think that really tells you something.
Absolutely. It's a mandatory question in all my interviews. All right. Okay. Well, let's come back to Courageous Lake. I almost called it Cigar Lake.
Okay.
Let's come back to
There is a
Courageous Lake
cigar,
for a
there is a
moment.
cigar lake.
That IRR looks, okay, not super robust, but okay, but it's at 1850 gold. Gold's higher. But on the other hand, I was looking at the map, like, wow, that's really far up there. How credible is that number? I mean, it kind of looks a little too good to be true, honestly. If Diavik's your neighbor up there, okay, not
Yeah.
right down the road, but that's not going to be cheap mining up there.
No, it's not. And fortunately, we actually have information from our neighbors there, Diavik and Ikati, in terms of what is the true cost of operations in that jurisdiction, working with the winter ice road that you have to rely on to bring supplies in for a year-round operation. So I think our numbers are pretty accurate based on comparable projects around. Obviously, diamond mines are not the same thing as gold mines, but mining per ton are. Transporting materials and diesel up there is the same. I personally believe that the real opportunity at Courageous Lake, not something we're going to do ourselves, but small nuclear reactors is the solution to these challenging, logistically challenging projects. And fortunately for us, Canada is kind of leading the research in these small nuclear reactors. I always believe that that's the way this project will get developed over time. Yeah, maybe it's 8 to 10 years in the future, but that's the real opportunity because that really changes the project dramatically in terms of not having to bring diesel up along the winter road season. Another thing that would help the project, and I know there's been dialogue going on now within the Northwest Territories, is to bring down an all-weather year-round road from Bathurst Inlet, which would also open up not just our project to year-round access, but also other projects in the area as well.
Well, our uranium bug fans will be happy to hear that, but and I'm a big believer in SMRs as well, but that is an if not when question, though. Your point is China's really the one leading the charge here, but there's Canada too, and it makes perfect sense because in the farther reaches of the Great White North, that would be an absolute game changer. I mean, the benefits I think are in pretty much incontestable. It would be fantastic for the people up there. Okay. But I would have asked, well, if this is so good, why aren't you advancing it yourselves? But I understand you've already answered that. Our focus is exploration. Can you say, are there any CAs on that? Or do you feel like you need to do some more work there before that really attracts bidders on the shopping block?
No, we are now getting ready to launch a sales process on Courageous Lake. We do not want to go out and compete with another large sale process that's going on now, and that this is public, that Newmont is looking to sell 6 non-core assets, all of which are in Canada, so we don't want to interfere or compete with that sales process.
But
That
but
should,
but sorry, but that happens all the time. I mean, if BHP comes back for Anglo, they're already I mean,
yeah.
M&A is overdue. I think we're going to see more M&A activity probably for years to come because of the dearth we've seen in previous years. So,
Which is why we're about to launch a process on Courageous Lake.
okay.
We went through a bunch of bankers coming in and giving us their pitches. We will be engaging a banker to run a formal sales process. We're getting the data room up and ready. We're getting the NDAs ready that'll go out to bring parties into the process, and we should be moving forward in that process fairly quickly here.
You know, maybe I should know the answer to this, but can you walk the audience through why do we need a banker to do this? I mean, I know you don't want to go to PDAC with a little sign saying Courageous Lake for sale, but people know your assets. You're not some fly-by-night junior that nobody's ever heard of. Why do you need somebody like that, a middleman in this?
Well, number one, you don't pay them unless they're successful, so it doesn't cost you anything. That's a big plus. But also they can corral the parties, they can get the NDA signed, they can bring them into the data room process. But you're absolutely right. It'll be our team that'll be selling them on the project through due diligence exercises. What a banker can do better than us is create competitive tension. And that's one of the reasons you hire a banker, is to try and create that competitive tension to get the best deal possible.
Okay, so moving to the other exploration projects, Iskut, it looks kind of low grade for polymetallic. I mean, what am I missing? Why should I be excited about that one?
Well, Iskut is we purchased that by buying a public company in 2016, after the gold price cratered. Opportunities were out again, available to us. We like to buy our projects when valuations are cheap, and they clearly was in 2016. We saw a lot of similarities at Iskut to what we saw at KSM early years. Yeah, there was a small deposit there, low grade, that came along with the acquisition called Bronson Slope. But our focus here is to find the intrusions that probably led to that mineralization at Bronson Slope. So over the past couple of years, we've been looking for the intrusions, the higher grade gold copper zones. We now have 3 targets that we've identified that we will be drill testing all 3 of them this year. And our hope is to find a big gold copper porphyry there with much better grade than what we have at Bronson. We actually have a lot of evidence of that already. I think one of the holes we drilled here a couple of years ago was a couple of 100 meters of 0.8 gold and 0.3% copper. Finding a deposit that has those grades will make a lot of sense. So what we have found so far, as a non-geologist, I like to say we have found the smoke. Now let's go find the fire. And we're now funded for a $12 million Canadian exploration program at Iskut that'll soon be underway.
All right. Well, that's another if not when question, but I much prefer a new target to putting lipstick on the pig in hands here. At Three Aces, that's another one that's been in several hands. I mean, 300 holes, and I don't see a clearly coherent high-grade zone yet. I mean, is there a new target there, or why are you the guys to figure out Three Aces when others have broken their picks there before?
Well, number one, we're going to be more patient. I think if you look at previous owners there, they kind of were just drilling for the next financing and just focusing back at the same area again and again and again, kind of the central core area, without really having a better geologic model for we think it's more of a district play. It's over 300 square kilometers. We've got over 25 kilometers of strike length with known gold mineralization, but no one's ever really tried to pull the whole piece together. We've been working on that the past 2 years to build a geologic model, testing that geologic model, and we're now confident that the geologic model is appropriate. So this year we're going in for the first time to try and focus on areas where we can start to delineate resources as we move forward. Yeah, that'll include some of the historic areas, but also stepping out along strike. Last year, and previous owners, quite honestly, were drilling very, very shallow holes. Most of their drilling was within 100 meters of surface, and they were getting multi-meter intercepts there of multi-ounce per ton intercepts, but never really looked at the down dip extension or how is this model holding up. We're now ready to do that. We actually did some down drill testing. We found one intercept last year of over 100 meters from surface, and we'll be hopefully advancing on our success from last year on this year's program. We're going to spend about $6 million this year at Three Aces. One thing I like to point out is, again, our ability to buy things cheap. At one point, Three Aces generated a market cap to the previous owner of over $200 million. That was in a very different environment. I get that, where an exploration play was being well rewarded in the marketplace. We bought Three Aces at the height of COVID, negotiated the deal in April of 2020, and we issued 300,000 shares to buy this asset when our shares were trading at about $10 Canadian per share. So, we see a lot of upside there, not just because of market caps in the past, but looking at this from a holistic perspective in terms of what can this project be to us. And our geologists think that there's 5 to 10 million ounce opportunity here of open pittable material along the strike length.
Well, even just open pittable is changing the idea there. All right. And snowstorm, I guess that I get that that's exploration. It says ingredients. So
early stage yet. We have not done this project justice. We've done a number of small programs over the years. Drilling in Nevada, as you know, is difficult. We also have a couple of 100 meters of tertiary cover we need to get through before we find the zones of interest. We bought this project from John Paulson, I think it was 2017. He had spent over $20 million putting this land package together and drilling. Came to the realization that he probably wasn't the right guy to explore, early stage ground in Nevada, and we stepped in and bought it. We like it because we see a lot of similarities to Twin Creeks and Turquoise Ridge. One interesting point is that you remember back in, I forget what year it was, but Placer Dome purchased Turquoise Getchell Gold. They paid $1 billion for a project that had 1 million ounces. They paid $1,000 an ounce. The person that was running exploration at Placer Dome then was Eliseo Gonzalez-Urian, and he convinced the Placer board to go in and do this acquisition, even though it was a high-priced acquisition based on what was there, because what he believed was the opportunity to further exploration. And over the years, that has yielded 20 million ounces to Barrick and Newmont now in their joint venture. Eliseo has been a founding member of our team from day one. When Snowstorm became available, he got involved in our due diligence with us, and he believes, as does our exploration team, that the same potential that was evident at Turquoise Ridge exists on the land that we purchased. We're not going to spend a lot of dollars on this until we have a much higher share price, because we're very careful with our dilution. And also, unlike our Canadian assets where we can go out and do flow-through financings at a significant premium to market, you can't do that in a U.S. asset. So this is one that's kind of in our backyard or in our closet now, that at the right time we'll move it forward when market conditions are different.
but it also gives you something to do when the Great White North is frozen over.
Fair enough.
I would think. Okay, so a lot going on. We're not spinning anything out right away. We're going to do exploration this year, and we're moving forward with the sale at KSM. Are we still exploring at KSM, or is it pretty much it is what it is, and we're going to focus exploration on our other projects this year?
And
what are the deliverables for shareholders this year, Rudi?
Yeah, so for this year, I think you can wrap it up into getting a deal done on KSM. That's first and foremost. We believe that a transaction with a major mining company will unlock significant value very quickly. I know I've talked about a joint venture for years. It hasn't happened. We are now in a situation where our stars are lining up. Getting a deal done now should be a lot less challenging than it's been any time in the past. Second will be a sales process on Courageous Lake, unlocking value from that asset to our shareholders, either in terms of you know having dollars available for the non-core assets, or maybe even something else we can do creative with dollars we might come in terms of a special dividend, depending on what else we need elsewhere. Um, Exploration success. There's no question that uh, over the last few years, exploration success has not been rewarded in the marketplace. We believe that will change over the next 6 to 12 months, because we think that the gold price will go substantially higher and Western investors will be attracted back into the gold space for gold equities. So exploration success, a deal on KSM and Courageous Lake, and then obviously higher metal prices. If you look historically, when we're in a gold bull market, from 1999, when we started the company, to today, our share price is up over 7,000%. The gold price is up about 660%. We've outperformed the gold price in a meaningful way in a long trending bull market for gold. And then
Have you
you look,
outperformed Bitcoin?
yeah, well, yeah,
Sorry, I just the seven
not,
thousand
not,
percent number made me think about that. Sorry.
not easy
Go
to do.
ahead.
But when gold is in a bull market and gold equities are flying, we fly even more. And we believe that we'll be approaching a time soon where gold equities will start to connect back with the gold price. Because right now, I don't think you could find any CEO of a gold company that actually believes their share price is fairly valued today
Well,
compared to
of course.
what the
Okay.
gold price is.
Sorry, let me jump in because I do have another interview to get to, and we have just want a couple clarifications. But it's you have the unique advantage of you could say superlatives about your company that nobody else can say because the nature of the deposit actually makes them true. Um, but okay, so what I'm hearing though is that um, you said 6 million in exploration for I forget which one that was for Three Aces. Are we spending money at Iskut or not this year?
Yeah, so we're spending $12 million at Iskut on exploration that we
This
raised in
year.
December this year, and we're
Wow.
spending
Okay.
$6 million at Three Aces. One other thing I forgot to mention was in terms of value in the near term is in January we applied for the substantially started designation
Yes,
at
I saw
KSM,
that.
which, if successful, which we expect to be successful on, means that our permits are then good for the life of the project. This is a major de-risking with respect to our joint venture discussions, because you can imagine that anyone that may want to step into a joint venture wants to remove the risk of the permits expiring in 2026.
Sure. So I have to say, I don't know what leeway the regulators have and whether that's a certain definitions that you meet and then they have to rubber stamp it, or whether they can say, okay, you've spent 440 million on it, but you're not able to build it until you get a partner here. You're not really substantially started, no matter what you've done. Help me out with that.
Well, substantially started isn't based on commitments to build the rest of the project. It's to show that you have advanced the project in a meaningful way by building infrastructure, permanent infrastructure that's required for the approved project. And that's what we've done. There are great examples of other projects in BC that have achieved substantially started designation, which have not moved forward, but they were able to achieve it. My experience is that when you go to the regulators for anything approved in BC, make sure you have the First Nation supporting that application. When we submitted our application on substantially started to the regulators, we have letters of support from the Tahltan Nation, the Nisga'a Nation, the Gitxsan Nation, BC Hydro, the town of Stewart, the town of Smithers, the town of Terrace, and the town of New Hazelton. So we're going in with loaded guns, and based on what we've done compared to other projects, we're very comfortable that we will get that designation, which I think is a big factor in terms of successfully getting a joint venture done.
All right. So it sounds like to wrap this up, maybe about 20 million in exploration and related activities. You had 80 million as of your last presentation. Presumably, it's somewhat close to that. So we're not going to need to go to the bank anytime or to shareholders to issue more shares anytime soon. And if you sell Courageous Lake, even less so. So shareholder dilution at this point, even though you're advancing the largest gold project in the world, doesn't seem to be a threat.
Yeah.
Or is there anything that I'm overlooking there?
Oh, no, we have dilution every year. I mean, that's a fact of life. We don't have revenue, so we have to fund ourselves in some other mechanism. We have done some creative deals, raising the $500 million we've now spent on substantially started through secured notes that convert to royalties, which didn't involve equity dilution. But we go to the market from time to time. We have an ATM that we've been active on or had in place now for 4 years. Over those 4 years, I think we've raised well over $200 million Canadian from our ATM without impacting our market. What I'm most proud about, Lobo, is if you look at this company, 25-year history, after 25 years, we only have 87 million shares outstanding. You look at
No consolidations.
no consolidations, no rollbacks, no. So yeah, we have diluted over the years, but we've offset that dilution with ounces. The
Sure.
concept of
I
growing,
get I have a free article on the website, The Dilution Dilemma. It's not just the dilution, it's what you get for the dilution. But to clarify again, I mean, according to your presentation, you've got 80 million, and it sounds like you're going to spend about 20 on the ground activities. The rest is corporate activities. So there shouldn't really be a need for more dilution this year, or am I missing something?
no, except that we are, when market conditions are ripe and we want to fund beyond perhaps this year, we can use the ATM as an effective mechanism to raise dollars without going out and doing a jump ball with the bankers, which in most cases results in a 10% drop in your share price pretty quickly.
Okay. So then finally, with that in place, or with that idea there, why would you do a special dividend? Like it makes no sense
Well,
to be, selling shares on the one hand and then, giving away money on the other.
The net asset value of Courageous Lake is north of $500 million. If we got a big number on the upfront sales process, and we don't have need of that capital, elsewhere for many, many years, that is something we could consider. We could also consider going in and buying back shares. It's a function of how much we get on Courageous Lake on the front end, and then what is the call on that capital going forward from other assets. And then we'll determine what's the best way to drive value to our shareholders.
Would the ideal deal for you on KSM not also include some cash up front or at the beginning?
It could. We're not asking for that. Our focus is to bring a partner in that's committed to move to a construction decision quickly, because we think we get a bigger bang for the buck than just selling a piece of the project up front for cash.
All right. Okay, and I already asked my skin in the game question. Good answer to that. So you've been a good sport, Rudi, on some pretty obnoxious questions here. So I'll let you have the last word. What would you like our audience to take away from this?
Yeah, look, I think if you're looking for exposure to gold and or copper, we provide that in spades. We have a 25-year track record of showing significant outperformance in our share price relative to gold and other gold equities. If there's a stock to own in a rising gold price environment, look at Seabridge.
Fair enough. Okay, well, keep us posted and good luck with it.
Thanks, Lobo. Enjoyed the talk.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.